share. All right, this is my chart, and then we were analyzing what the GBP, USD, and gold, right? So Jackson, are you with me?
Yes.
All right. Now, each time you come to the 24-hour, is where we used to read the overall directional bias. You understand? Each time you come to it, like I said in those videos on YouTube, even in the video in the course, each time you come to it, you have to mark out a highest point and then a lowest point. You have to try to focus on the current pattern you see on that 24-hour time frame. That is the whole direction you're going to work with. Understand? You have to look at a pattern. Your pattern can be the whole of this. Your own pattern can be the whole of this place to the current market. Your pattern can be just this one. Your pattern can be anywhere. You can look at here and here, whatever pattern is there. You understand? So which one is convenient for you is what you do. You understand? But for me, I have this as an impulse. This one is an impulse. Then I have the whole of this place as a correction. You see the market is going back and forth here, creating higher highs, sorry, lower highs and lower lows. So that is why I have that as a pattern, because I know my trend line can suit in whenever there's swing highs and swing lows. So at the beginning of the correction is where I put the highest point, which is this one, because that is the beginning of the whole correction, right? Then the lowest point of the correction is this. This is the lowest point of the correction, this swing low. Then the next thing you do is just to connect the trend lines. You see 1, 2, we have the touch there. Then we impossibly the market is outside the trend line right now. Then we have to connect the supportive one, because anytime you have a resistive trend line, you definitely have a supportive one. So we connect them like this. At first, when the market left here, we were expecting a third touch to happen at the supportive side, but the market didn't give a third touch. The market didn't come down to that extent. Instead, it created a higher low, which is higher than this previous low, and then we are having this bullish run. Now, this is all I can have on the 24-hour. Then I have to go to the 4-hour. Now, one thing about the time frame switching is each time you switch the time frame, you have to focus on the current side of the market. Now, I have all of this pattern from here down to where I have the current market. But whenever I switch to the another time frame, I have to focus on the current pattern I can find in that time frame. If I like, I'll focus on this alone. If I like, I'll focus on anywhere like the one you did, like the one like where you focused on the whole of this. You focused on it. You have a trend line there. You understand? If you like, you can focus there. But I want to focus on marking out the next swing high, because the market is close to a swing high. Can you see that? Can you see that the market is close to a swing high?
Yes.
Which of the swing high?
Yes.
All right. So the market is close to a swing high. That is the information I've gotten from this time frame. The market is close to a swing high, so I just have to align it in case it comes to it, so that I can understand the what is it called, the condition it will come to it to do. Because right now the market is not where I'm supposed to take my trades. If I was doing the normal Falcon, then I'll be looking to take my buys here because it's looking like a bullish flag. But now I can't take the buys here because the market won't move without liquidity. If you take your buy here, you are definitely going to be liquidated after this sweep. The market will come down to find another block here or somewhere below, because we just broke through. We broke through this high. We broke through this high. We also broke this high. So the market has to find its way to retrace down to mitigate another block before we continue the buys, and then hopefully targeting the 90% right there. So this is all I can find on the 4 hour. It's not on all the time frames you have to plot trend line. Every time you go to a time frame, you have to understand, get an information from there that will help you further understand what the market is doing. You understand? So I go to the 1 hour right now. And then from the 1 hour, that is when I want to focus on this guy. So let's go to the 1 hour. Now, now on the 1 hour, clearly you see that yes, the market is having. Let me follow the way you did. You see, you had this channel, right? You had this channel, right?
Yes.
You had this. Now, because you have this, you are supposed to know that the market will still come. This thing alone is like it tells you that the market has to come to sweep this top first before you can do anything. It tells you that automatically because this is the first touch, this is the second touch. This one is a touch on an impulse. This is the impulse downward that started the correction. This is actually not even a correction. This is not even called a chart. This is not called a chart pattern. This is called a price channel. You understand? Because this is impulse correction. A chart pattern is drawn on a correction alone, but a price channel is drawn with a combination of impulses and correction. That is when it is called a chart channel or a price channel. But price patterns are only on correction. That's where you have the flag, the bullish flag, the bearish flag, the whatever flag, the pennant. They are all chart patterns. But when you have impulses inside your your trend line, you have impulses and correction inside your trend line, then they are called it's called a price channel. So because of this price channel you have drawn here, the highest thing I see this price to do is for you to find this way to the downside here to touch this guy, then find this way to the third touch of your channel. You see this? Did you see what I did? Jackson.
Yes.
Uh-huh. So it's for you to find its way like this because of the price channel you have. It's for you to find its way to give a correction and then come to third touch. Now, like I said earlier, I can't do anything until this guy is broken. The previous swing low we are approaching is broken. That's when I can do something to the market because I always want to trade when the market is at an important level. If it is not at an important level, you are trying to just put yourself into liquidity. You have to make sure the market is at an important level. Important level is like a swing high, a swing low, at a trend line, something like that. The market just it's not supposed to be at a regular place or an irregular place that you just want to trade. You have to be at an important level. That is where you get more information from. Either a swing high, a swing low, or any part of the trend line. But when the market is just out of the sunlight, you don't have nothing to do with it yet. And then if you combine the Falcon scenario of trading, yeah, this guy have to happen like this because after an impulse, you have to correct. And then with the combination of the knowledge of the price channel you have already drawn here, we have to just find our way to this guy and then go here to sweep this equal highs. Then when this high is taken, then we look for a drawdown because either the high is swept or the high is broken significantly, the market has to pull down to come to mitigate another block before we start to go further. Understand? Did you get what I said, Jackson?
Yes.
Anytime the market either sweeps a high or breaks significantly above the high, this our this channel we are having is kind of telling us that yeah, we are going to have a kind of a significant break above the high because this is is significantly above it. If I put the ray here, that is if it's even where the market will come to touch the trend line, this is significantly above this guy. See this golden line significantly above the white line. So anytime the market breaks this high, either it sweep it maybe just with a candle for it to keep dropping, or significantly breaks above it, the market will definitely come down because we can only take our buy entries at a retracement, right? When it comes back to touch another block. So when it comes back here, there's another block here. It might mitigate this one. It might find its way to this supply zone, to this demand zone. It might find its way even to the extreme. But the one with high probability is this one for me. So when you find its way there, then that is when we now start looking for the buys to join the higher time frame analysis we had, which is broken out of this guy, and they're supposed to be looking at the 90s. Is there any question?
Mm, not really.
All right.
Maybe can I also try to analyze one as you keep saying?
Is there any way I bro, I'm used to using the Google chat, all right. Sorry. Yeah, the Google Meet. And I don't know how to let you share your own screen for me. Can you try to look at your setting and see if you can share your screen for me? Then cool.
Maybe when you make me like a co-host.
Cool. Let's go to the GBP USD before you get to do that. So I want you to get everything. Now, bro, there are more things to the reason why I held on to the fact that the market has to go up, right? Have you noticed that?
Yeah.
Uh-huh. The reason why I held on to that fact is what the market played earlier before having this bullish run. You see, the market was in a downtrend, and then for us to confirm the downtrend, for the downtrend to keep going, the market it was supposed to come to break this low, creating a lower low. Then we know that yeah, we just have to pull back and then continue to the more downtrends. But when the market approached this low, it didn't break the low. Instead, it just came closer to it and then started going back up. So each time, mark this, bro. Each time the market fails to break a swing or like any of the swing, if it's in an uptrend, each time the market fails to break the swing high, then the market is about to reverse to the downside. It's about to change its trend to the downside. And then if it is in a downtrend, each time the market fails to break the swing low to create a lower low, then reversal is about to happen. So that is what happened right there. The market failed to break this low. The market failed to break this low, and then that is why this reversal is strong. That is why I have more confidence that this guy is going to keep going up. Because if you look from the past, since we're in a downtrend, we kept breaking lows. We broke this low. We also broke this low. So we broke this low. Those are confirmations that yeah, we are in a downtrend because the lows are being broken. This is now a low. It created a lower low. Instead of coming here to create another lower low, the market refused and then created a lower high because we created a low higher than the previous low. You see, so that is why the reversal started.
So maybe the other question I could have, the the price, the patterns are always drawn from where the correction is starting.
Yes, that is what is right. That is what is called chart patterns. Chart patterns are drawn from where the correction started. But price channel,
No matter what time frame.
no matter what time frame, bro. But price channel are always combination of impulses and correction. Like it's a channel that holds price. It's not a channel that is holding a correction. You see, this is an impulse to the upside.
Yes.
This is its correction.
Yes.
Let me take some of the stuff out of this chart before.
I
Okay,
wanted to get a demo account on TradingView, but it has failed me. How do they get the demo?
bro, I don't want you to get sorry if I'm trying to, be kind of, I don't know. I don't want to be too directive to you, like giving you directions or giving you orders. I understand. I want you to understand how to deal with these charts even better than trying to place those trades on. You understand what I'm saying?
Mm,
You have to
okay.
understand the whole of this first. If you understand this, when it comes to placing to it, it's not a big deal to open a trade. It's just press buy, press sell. But if you don't understand what is originating those moves, what is originating the reason why you are trying to sell or buy, then you are going to have a problem. So that's why I told you the other time that you should stop the depositing, stop the devil account, and do your chart game. When you understand the chart very well, when it's time for you to buy or sell, at times you don't even need if you are trying to backtest whatever you have analyzed, you don't need a demo account for you to do it. When you put the long and short positions, they hold it for you. Like if you are looking to buy here, you just let it. Oh, sorry, this is a short. If you are looking to buy there, you put the buy and then you set the stop level and then you put it. If it plays out, you definitely will see your chart inside of it. If it doesn't play, you see you take the stop loss. You understand? But I don't want you to be caught in making the blues. I want you to be caught in knowing the technicals. Try to understand the charts very well. When you understand the chart, the other things will follow.
All right.
Thanks. So this is a price channel and not a price pattern because it's having impulses correction. So it is a price channel. It's a price pattern is you see the pattern within this is an impulse and then this is a correction. You drew the trend line on the pattern. This is what is called a bullish flag, and then it's anticipation to the upside. This is also another price pattern, another bullish flag, and then it went up. But this is a price channel. Please try to understand their differences. Now let's go to the GBP USD. And I like the fact that you adhere to the advice of keeping just to the both of them. Even if you trade one thing, bro, the market will feed you as much as you want to be fed. Because when you focus on one thing, you'll be able to catch a lot of its moves compared to when you are disturbing your head with a lot of them. Already analyze this, and then I have need for it to calm down because this is an impulse a correction. So I was looking for it to drop, but it's kind of it gave a very big bullish candle to the upside, sweeping this. So it's more confidence that yeah, it's going to drop. But let me explain why or how I did all of that to you. Now, remember, like I said earlier, I said whenever I come to the chart, I want to look at the current pattern, not even the past. The past doesn't tell me what's going to happen in the future. It is the current that tells me what will happen in the next, like what next will happen. That's why I always say to you guys that the current pattern has the highest probability of playing out. You understand? So if you look at the current structure of the market, we have this impulse to the upside, and then we have this correction right now, creating swing highs and swing lows. So this is a correction. That's what we have on the current structure of 24-hour on GBP USD. So like all the time, you just mark your lowest point on the uh, lowest point of your correction, and then the highest point at the highest point of your correction. If you want to have it there, cool. I saw you have it here. It's also nice. The reason why I had it here was the day there was when we were analyzing this guy earlier. It was the market was still around here. So if your current highest high is the current place of the market, then there's no need of you putting there. You have to look for that one. So that's why we had this during the watch list. But if you are here, since the market is here, and then this one is higher than this current one, then this is the highest point I have. Then clearly, just for you to try to understand if trend line can be connected, then you see that yeah, we have two swing lows and then two swing highs. So we can connect trend line because trend line can be connected on two swings minimum. Then we have this pattern to the upside. Now you see, we had an impulse to the upside, then we also having a pattern to the upside in the same, like running trend line in the same direction. So it is a reversal pattern, right? But the market will not reverse yet, or you don't know what will happen until it gets either to sweep the top or to the third touch. I want you to understand that the market will never move if liquidity is not taken. Whatever move you see the market is doing, then it's trying to tell you to get in so that I can take your stop loss. You understand? So you have to always be patient when you don't see the market, when you don't spot liquidity taking. If liquidity is not taking, the market can't pay nobody. So you that joins when liquidity is not taking, you will be used to pay people. So I come to the 4 hour, and then like I said, I always want to look at the current side of every time frame I go to. The whole of this is meaningless to me right now. So what I want to look at is the current pattern. This is the current pattern I have on this is the current structure I'm having on the H4 on pound dollar. This is the current structure I'm having. So clearly, you see already we had an impulse from here to the upside. The whole of yesterday and day before yesterday, it was an impulse to the upside. Then when the market got here, it created a minor high, calmed down to create a minor low, back again, created another minor high. Now it's kind of trying to come back again to create another low. So I know that there's a swing there. And then you remember that your trend line can be connected with a minimum of two touches, right? So I see the trend line going like this. One, then two. The trend line is going to be connected in this manner. And then if you see the way the trend line is running, it's slant to the upside. That means we are losing momentum to the upside. That's why we had this bullish candles. Now we are having bullish and bearish. The momentum to the upside is getting weak. So, and then you see it is getting weak very close to a previous high. So definitely we are looking maybe sorry, not maybe. Definitely the market is looking to sweep this high and then give us a drop to the downside. So that's why I said I can't do anything if the market is not on an important level. So I have this swing, I have this real line because this guy is the current, you see this guy is the current candle, right? And then it is not closed yet. So I can't tell you where my trend line should shoot. I can't put my trend line 1, 2 because that is the current candle. I can't put my trend line on the current candle. It is not adhering to the rule. You understand? Are you getting me,
Yes.
bro? It is not
Yeah.
adhering to the rule of trend line because I have to make sure that my trend line have two clear touches before I fix them. You see, this one is the clear touch because we have a lot of candles of 1, 2, 3. Like candles away from the swing. So it is clear that I can put my trend line there. But since the current swing you are seeing there, it is still the current candle. There's no need of putting my trend line there. 6, 1, 2, 5. There's no need of putting my trend line there yet. So I have to go to the 1 hour to see what's up. Each time you switch the time frame, don't forget these rules, bro. I hope you have your books, your pen and paper with you. Each time you switch the time frame, your focal point is the current thing you have. Now, the whole of what we are preaching from the past is just for us to use as confluence. This is where we are now going to focus on because this is the current structure we have drawn so far. This is the current structure, right? So from this current structure, what do we have? You can see clearly on the 1 hour that
Impulse.
we had an impulse to the downside. You see. Now, like I said, I don't know if you have watched the video. I said there's something called impulsive correction. Do you remember?
Yes.
When you had an initial impulse, you know the next thing you are supposed to expect is a correction. But when you have an initial impulse and then you still have another correction, then that is when you're supposed to. That is what is called impulsive correction. Is that clear enough?
Pardon, I didn't add it properly.
I said when you have an initial impulse to the like you see, we had this impulse to the upside, right? We have this impulse to the upside, right?
Yes.
This bullish round to the upside. Then instead of the market coming to correct, instead of the market correcting further, giving us a clear correction, it dropped down. Instead of the market giving us a correction, just need to do like not here, just count. Instead of giving us a clear correction, like after this impulse like this, the next thing we're supposed to have is supposed to be something this drop, and then we come back here, come back here, come back here, come back, something like that. That is where the correction is going to be valid. But you see clearly that after that impulse, what happened is we had a first correction to the downside. Then inside that correction, the market started giving us a lesser correction of it, a lesser correction in respect to it. That's what we call it impulsive correction. Now, it is called impulsive correction because it's supposed to be a correction, but instead it is serving as an impulse for the current correction. Is that making sense, bro?
Yes.
It is supposed to be a correction for this guy, for this impulse, but it is now serving as an impulse for this correction. So that's why it is called impulsive correction. So where your focal point will be is not the initial bullish impulse. The focal point will be on the current bearish impulse, which is this. So we have this correction from the bearish impulse. You can see that the sell is actually going to play out so that we can get a better swing low to connect the trend line from the H4. One thing about the market, they're all built on each other, you understand? When you get this, you understand why you had the other one. So everything built on each other. So this is the H1. And clearly, I tell you the market has to give me an impulse to the downside because he had impulse, we need a correction and then impulse to the downside so that we can be able to look for somewhere to connect this guy to. So to the M15, I think this is where we would have gotten our entry. Entry criteria one. What can you remember what it is if you have gone through the course? Jackson.
Yes.
What is entry criteria one from the course?
There are two. They are aggressive and conservative.
No, the criteria one itself is the retracement candle. Those are types.
Yes. Next,
Types.
near the trend line.
You're talking about types. That is aggressive or conservative. Those are types of entries or type of entry. But I'm talking about the criteria of which you enter. What makes you take the trade is this. You see, we have this rejection candle from the trend line. This,
Evening star.
thank you, bro. The first one, the middle one is the shooting star itself. So that is already a sell signal. Immediately it closed, then we are supposed to pull out our sell at the opening of this candle, and then the stops will be at the top of it. And you see the stops will be at the top of it, and you see now we are in profit. So what we are to be looking at is for us to further break below. But since we have this, you don't know how much the impulse below will be. You just have to target the 90s, which is this place, the previous swing low. Target the previous swing low, and that's it. And then you see this is 1:8.6. Then it's a good trade, and then you're already in profit. So that's one of the entry criteria. If you go down to the 1 minute, you would have gotten entry at this end because there will be other block here to be mitigated, and which was mitigated before they dropped. So you'd have gotten a quicker entry at this side. But for now, I want you to deal with analyzing these charts, bro. I want you to understand very well how to deal with them. That is where the problem you're having is. I want you to understand how to use the information from the 4 hour to understand what is going on in the 1 hour, and how the 1 hour is also helping you to predict what is going to happen on the 4 hour, like how to intertwine this time frame. If you are still having problem with it, go to the multi-time frame handbook, read it, and also look at the video attached to it. It will explain further for you. Do you have any questions, bro?
Not really. Maybe we could have some one more pairs.
Yeah, sure. Okay. I was asked in the Discord in the Telegram to analyze Euro CHF. So let me show you what I have and why. This is one thing about the should I say, this is one thing about the what is it called, the career we have. You see, these things they tend to repeat themselves. Understand? So once you have, that's why Mark said
I
once.
I think
Uh-huh.
I had not understood where we begin marking our lower lows and the higher high.
Okay.
Since whether you begin it from the correction or the impulse. So me, I was just beginning it from elsewhere, but now I can see the correction and the impulse, I think.
All right. So that, like I said, these things they tend to repeat themselves. Understand? So once you see it, you can't unsee. Like you can. That's why Mark said that once you see it, you can't unsee it, because once you have known the chart, it's in you. Now it's just like the same GPUSD. We had the impulse to the upside, right? And then now this is the correction. It's
Yes,
so you know already now we have to mark our lowest point at the lowest point of the correction, then the highest point at the highest point of the correction as well. So we have this. This is the lowest point of the correction right there. And this is the
yes,
highest point of the correction. And I will take the
yes.
highest point because the market is not at that place yet. I didn't mean the market is at the highest point, then I'll look for another highest point at the left hand side. But since the market is not there, the higher point is relevant for me. So that is the highest point of the chart. And you can see you can connect the trend line just like we did on GBP just now. You see, we have this 1, 2, and then we have this 1, 2. Clear. Then we go to the 4 hour. We have 8 minutes on this call. We go to the 4 hour. Now on the 4 hour, what are we saying? From the rules of the trend line, whenever the market leaves a trend line, you have to approach the other one unless we have the formation of the three touches that makes a break. So we just left this trend line, though it left it, you see, it's correcting. Kind of like the momentum that the momentum from the rejection is not strong. It was to and fro. It's correcting, yes. And then the reason why it's doing that is because we are approaching an equal high, like a previous high. We are approaching the previous high. So literally, you are going to sweep and then drop further. You see. So this is what I have. I told him I can't go further because the market is not in an important level yet. There's no need of me joining any pattern here. There's no need. There's no need because clearly you have seen that the market is not in an important level. It's not touching the trend line. This was the only important level of this whole move. Let me show you. This was the only important level of this whole move, this place. Because here it opposes the trend line, and then we have a rejection candle. So that was an important level. But right now the market is in between. It's not on the trend line, it's not at the double top. It's not at the equal high or the previous high. So it is not in an important level. So you don't have anything to do. The biggest thing you do is for you to wait. Wait for it to either get here, play around, then you know what it will do, or you wait for the market to come significantly. You wait for the market to come significantly to break this low. When it breaks this low, then you know that the trend is about to change because it broke a significant low. But for now, the market is doing nothing, so you just have to wait for it for the Euro CHF. You understand? So do
So
we do
when
that?
you meet a,
I'm listening.
so when you meet a scenarios like that in the market, you can leave that pair
Yeah, just
for the
let it.
meantime.
Yeah, let it be. Let it give you more information before you go and work with it. Because this is kind of better. If you are a newbie, you get frustrated, bro. You see the market. Yeah, it's moving. There are pips counting, but you're not getting anything because it is not actually not your fault. But this is where psychology plays. It is not your fault. You are not doing anything wrong. What you are supposed to do is to wait. But a lot of people can't wait because they see money moving. They think they have to just get in somehow, and then they keep losing. You have to understand when to. I saw a quote. He said, "Understand when to buy, when to sell, and then when to go fishing." The go fishing is meant for you to just forget about the market. Understand? Sometimes the market won't give you information for you to trade or for you to analyze with. Let it be and then come back later. If I was only having this on my watch list, I would just go and chill for the day or chill for whenever it's because this is the 4 hour and the 4 hour is very far from the trend. So I have to wait for it to do its thing before I come back to it. So let's do something else, or let's do you said you were doing last US 30, right?
Yes.
So let's do that, and then I hope that the time won't get us switched out before we are done with it. US 30.
You have passed it. Think it is up.
Yeah,
Okay.
I've seen it. I can't even remember what we preached on this, but I think it was nice because yeah, I mean you can see clearly. Yeah, you see we have this. We're expecting it to see equal highs. It always has to come to take equal highs before we look for. So you see now we're having some kind of bearish pattern here. Anyways, let's go to the 24 hour to see why. We've got 4 minutes, bro. So this is the 24 hour of US 30. You see. Now the 24 hour we have here, like I said, try to find a current pattern for yourself. I can't call this two nigga. I can't call this a current pattern because the highest point is the current point. I don't understand. I don't know if you understand what I'm saying. We are supposed to fix the trend line. It's just a candle away. So it's not making sense for me. I can't call it a swing yet. It's just one candle. I can't call it a swing. So that is not going to be my current pattern. So I have to further go, into the charts to see if I can get a better pattern for me to use as my pattern. So because of that, I want to take this end as my import. The whole of this. Though we had a correction here, but that is not a relevant one because it's 9 o'clock. It's not a relevant one, you see. So I have to take here as my impulse, and then I want my corrections to start from here, and then the lowest point of it is here. So this is my highest point of the correction I want to follow, and then this is the lowest point. Then from there, I have this 1, 2. The market currently is at the third touch of it. Then I have to connect the lows as well, the supportive trend line as well, which is 1, 2. So from here, and I see we were in a downtrend. The market was trending down. And then clearly, yeah, we did break this low. So there's a high chance of the market to further come down. So we now go to the 4 hour. I hope this is just as simple as the others, right? So we go to the 4 hour. Like I said, each time you switch down the time frame, you have to focus on the current side. So the current side I have here is for me to filter out for myself a current pattern I want to look at. If we look at the market here, we had this bullish nigga to the upside. Sorry, bullish run to the upside, bro. Forgive my language. We have this bullish run to the upside. Then now we are having you see, this is kind of a correction. You see, it has swing highs and swing lows inside of it. This is like a running channel.
Yeah.
It's a very big running channel. So the reversal is very, very likely to happen. Like for you to sell is going to be like mad. So I have this connecting it, and then I can connect it like this. This is when the market is getting messy, and then I have just 1 minute with you. The call will be up soon. So I have this like this, right? So what I'll be expecting is for me to come and touch here because the market left this trend line. Since then, I've not touched here yet. It was only playing around, catching liquidity of double tops. So the market, I want the market to come down here to this trend line. Then if it breaks, then we look further to this and then also go downward. So this is what I have on the 4 hour. Then I go to the 1 hour. On the 1 hour, I want to look inside the 4 hour correction, inside the 4 hour pattern I have to see if I can get more patterns or a better pattern to explain the what is going on. But I have to rush now because the time is counting down on us. So I have this on the 1 hour and I want to do this as well.